Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap for Thursday, October the 8th. My name is Doug McKay. I am the founder of Quantum Leap. Quantum Leap is a subscription room. It is a live trade room. Each morning we come together in these live pre-market sessions to take a look at the market, macro to micro, structure of the market, drill down, determine where our trade levels are going to be, where our targets are going to be, and what our main hypotheses are for the day. If you want more information about what we do here, please send me an email at quantumleapfutures@gmail.com or simply give me a call on my cell phone, 647-545-8065. This is not a commercial venture. I do not have a website. This is a private group of traders operating within a self-organized learning environment, what we call SOUL. If you want to see more of these videos, go to YouTube and do a search for Quantum Leap Futures, and please follow me on Twitter at Crazy2, spelled K-R-A-Z-Y-T-O-O. Before we get going, got to do legals. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves a risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's just take a look at what we were talking about yesterday. Yesterday we were looking for a rotational day with an upside bias as long as we stayed above the 1964. We did say if we got inside of the range and got below this 80 that we were liable to come down and take out the naked cross and the naked close, and then get an 80% destination trade from value area high to value area low. We rejected the range at the open, broke out, went up, didn't quite get to our 92.25 target. We got to 91.25. Sellers stepped in. We rotated all the way through, and we had a pretty orderly auction all the way down into those targets below and the value area low. Buyers stepped in at the value area low, took us right back up through value again, chopped around, and then we went for the breakout again, got as high as 87.75, and then seller stepped in again, came down, didn't get back into value, rotated back up, and then rallied into the close. We've got basically, we've rejected the value from below. So we've accepted price acceptance in around the 3-day microcomposite VPOC, or the most traded price in the 3 days, which is that 1972.70. Taking a look at what happened overnight. Overnight, we opened up and then we sold off all the way back down into that 72.50 area. I actually took this short right here. I got short 87.25 and rode it all the way down, and took my last contract off at 72.50. It was actually a very long, boring trade. Marvin and I were chatting late into the night as usual, or into the morning for me. But since then, we've accepted that value again overnight and rotated it back up, and we're accepting value higher and around the overnight Globex VPOC up in at 18.80.25. So before we get too deep into the analysis, let me just go and let's go through our normal routine. Each morning I like to start my morning looking at a macro to micro view in terms of where we are in the trends. I use a candlestick chart with a 9 EMA and a 20 SMA. Those are the two moving averages I use on all my charts. And then I look for slope and separation, strength of the trend, and where the trend is being challenged. And obviously the monthly we've broken below the 9 and the 20, and the trend is being challenged right now. Again, I'm pointing it out each morning. We've got a bit of a pattern here that is similar to this pattern right here, which rolled us over. And so we have a possibility that this could roll over. So the trend is challenged on the monthly. On the weekly, we continue to trend down. We tried to break above the 9 on the weekly, got as high as that 91.25 range high yesterday, and then we rejected it, and the trend continues. So we do have a downward trend on the weekly. On the daily, we've rolled, we consolidated, and we've rolled back above the 9 and the 20, and now we've got a possible trend setting up on the daily. We do have a naked cross here at 1939.25 on the daily. Make sure you write that on your in your journal. But we are starting to get slope and separation to the upside. Going to the 4-hour, we have got a pretty strong trend going up until overnight, and you can see we're being challenged. We came down and tested the 9 and the 20. They bounced off the 20, and now they're back over the 9. So we want to see if we get slope and separation again and continuation on the 4-hour. On the 30-minute, we basically got consolidation. I was actually just trading off of this level right here. I took the short on the FOMC, or the unemployment news, and came down. We took out that naked cross. Pay attention to your naked crosses. Here's one right here. Look at this one right here. We came down, left this naked cross. What did they do? They came up and took it out. On the way up, we left a naked cross right here. What do they do? Come down and take it out. These crosses will not be left. We do have a naked cross down here on the 30-minute at 1966.50. We got another one on the 30-minute down at 1913. There are a few more on the 15-minute. We've got this one up here at 86.25. There's still one below us, I think, on the 15-minute. Yeah, all the way down at 1903. So we've got more room. We've got room and targets to both sides. In terms of the trend, we've got more consolidation sideways, but we're holding the 20 so far on the 15-minute. And then on the 5-minute, it's just consolidation, but we are below the 9 and 20. So really a mixed bag in terms of where we are in a trend. And I think we're going to get a rotational day today. We do have the Fed minutes. We had unemployment claims coming out this morning. They came out better than expected. About 11,000 less. Got a little bit pushed down into that 76 area. They rallied from there, and they're trading right now 79.75. We've got natural gas at 10:30, and 30-year bond at 1. But the big news is going to be Bank of England, Carney speaking, and then of course the FOMC minutes. The Fed number for September was 1991. So mark that number. They're likely to slowly work our way up towards that number coming into the Fed meetings this afternoon. So let's take a look at the big picture. So this is the micro composite that we've been following from the 0921, the break, what I call the significant breakout candle, and we've been in this balance area between the value area high at 71.75 and the balance value area low at 1891.75. We've dipped below it, above it, and below it, and now we're back above it. Anything above this 1971 and a quarter. We are in price discovery. They broke out. They tried to come back inside of it, and then they rallied yesterday, and so far we're holding above it. Our 3-day microcomposite VPOC is 72.50, so we're accepting value above range, and I'm sorry, not above range, above value, longer term price acceptance, and continuing to stay into price discovery. Key level to keep an eye on is going to be this 81 today. If we get above 81, I think you're going to see a move up towards that Fed number, with the first target being that 85 and a quarter. I mean, look at how great a target that 85, 86 level was for us yesterday. I think we're going to have something very similar. We do have the naked close up here at 87 and a quarter. Scott called that on the nose yesterday for the close. And then the big key line in the sand for us above is going to be this 91.50, right at where the Fed number was and the range for the 3 days and yesterday's range high. If we get above that, then I'm expecting to continue up and test into the 99 and a quarter, 99 and a quarter, 99.50 area, and possibly into the 2000s. Key line in the sand below us is going to be still down there. I was using 64.50 yesterday. That's the value area low of the 3-day micro composite. I'm going to just raise it slightly to the 65 and a quarter. Reason why is our value area high is increasing. Yesterday it was at 68.50 or 69. Today it's moved up to 71. So if we get below inside of value and we get below the CLVN at 95 and a quarter, I think that we'll get a bigger move back down into this 53. There's still a lot of repair to do below us. That doesn't mean that we can't continue some price discovery to the upside. Our 20-day ATR targets. Our 20-day ATR, average true range, is running 37.40. It's starting to come back down into more realistic levels. At one point in time, we were running an average true range above 50 points, which is very rare. But based on our overnight low at 1971, plus our 20-day ATR target of 37.40, that gives us a ATR upside target of 2008 and a quarter. And based on the overnight high at 1989 and a quarter, less the ATR, our average true range downside target is down here at 51.75. Both targets are at key levels. This at that 52, 53 level, which we just looked at on the composite, and this one up in basically near the rule of 10 and right at that key CLVN up there at 2009.75. So let's take a look at what's happened overnight and then start moving our numbers over. All right, so we've got a pretty good distribution once we got back down into the 80s. This area of the profile is very thin up here, and you've got this, let me bring this to the front. We've got this zipper area right here above 83 all the way up to basically 85. So that's why I'm saying that if we get above that 80 level, we're likely to rally into that 85 again. We're currently trading 79. So our overnight high so far is 89. I don't think we're going to, 89 and a quarter. I don't think that, we're going to go and make a new high before the open. And then our overnight low is down at 71. And I don't think our VPOC is going to shift. It's at 80. And we got a little bit of an LVN here at 77, 75, but we've got the value area low just below it at 76, 75. I don't think I need this for anything now. Let's just move this and expand this out so we can see this better. All right, so my main hypothesis is a rotational day. And you can see how blunt this area of the profile is above 80. So we've got our value area high here at 80.75. We've got this cluster. We keep getting these big clusters where we get a lot of confluence in the middle of our profile lately. But our open from yesterday was 81.50, and our VWAP was 80.75, with our value area high for the 3 days at 80.50. What I'm going to do is I'm going to use 81 as a trade area, even though there's really nothing there on the longer term in terms, or the shorter terms in terms of price rejection. You know that most of the times I like my trade levels to be at areas of price rejection, either longer term or shorter term or a combination of time frames. But because we got this blunt area and we've got this zipper overnight up at 83, I think if we get above 81, we got a shot into that 83, which is going to be my next level, and I can trade that. Then I can look to accelerate it inside of the zipper from overnight up into that target at 85. And then look for, a move above the 85.25 and get continuation and then to take out the naked close at 87.25 and the naked VPOC that are both up there. So I think that makes sense, and I can actually do an accelerated entry up here above 85.50 into that 87. So nibble at 81.50, go light. Get above 83, we accelerate, we press it, and then if we get continuation, we don't get responsive selling at the 85 area, then we do another add into the 87.25. And for a move to take out the overnight high up here and test the value area high. So this is going to be another trade area and target. And if we get outside of value, then I'm looking for a move up, into the, the Fed minutes coming up at 2 o'clock to be somewhere trading in around this 91 area. A breakout of 91.25, okay, gives us a move up into our, it's 91.50. I'm using the CLVN here at 91.50, even though the range high is 91.25. I want to make sure I'm above, not just the range high, I'm also above there. And then we've got the target up at 95. Then we've got the 99.50, our 02.50, 04.25, and then the key area, which is our ATR upside target, and our CLVN. Once we get into the 2000s, I'm looking for the rule of 10 to kick in, push through a centennial number by 10. And then above that, we've got the 13, we've got the 15.50 naked close, 17.50, and then 21. And I don't think we're going to get much higher than that today. If we hold below the 81 or 83, I could see them pushing through, maybe even up into the 85, but if they do that and then they fail and they get back below yesterday's VWAP, then I'm looking for them to come down and test the 77 value area low. Now I'll be looking for responsive buyers to either step in here. If they don't step in here, then I'd be looking for a move down to test that 75 area. You've got a CLVN at 75.50, and you've got a LVN at 74. So I'm going to use the 75 to 74 as a trade area. Below that, then I'm looking for that 72.50 again. That's the 3-day micro composite VPOC. I got to be aware that I could get responsive buying here. This is where I really consider watching the tape very closely for a responsive long off of this point as well. A lot of confluence in there. And then below that, we've got the overnight low at 71. And then below 71, we've got the CHVN at 70.25. And then there's really nothing down there. I'll be watching this area right here at 67.50 for a breakout and then a test of our key line in the sand. Anything below 65, I get extremely bearish for the day and looking for a move down into the 52, 53 area. Remember that our ATR target is down here at 51.75. We've got a major target down here at 52. So I'd be looking for a break below that key line in the sand. Test the 63 area. Is it still 63? 65. 63 is no longer going to be a factor. It's going to be 62.50. And below there, you've got 60 CHVN, 50, 55. Take this out. 55 even. And then below 55. We get below 55, this is going to be a quick little, nice little trade down here into the 52. You got price acceptance where we tried to hold value, so they'll be looking to find some buyers down there. And then the next key line in the sand is going to be this 48.75. We all know how important that's been to our trading. Let's just fix this. And below 49.75, the next key level is this 43. That's also a naked close, so I better send it back. And then below that, 40, 50, and then we've got the 30, 38.50. And then below that, we've got the 35, and then the bigger target down here at 31. Once we get back down here, we've got this area of undetermined fair value just above the most traded price going back to 921. So below 31, you've got a little bit of support coming in at 29.50, and you got a target 27.75, 25.25. But remember, when you get into this area where you get undetermined fair value, you got these areas of price rejection aren't going to be as strong, and they'll whip around from these CHVNs to CHVNs. But the big target is the 23. Okay, and then below 23, we've got 1750. And then we get 1350. Why am I going so far down? Well, it's a Fed day. We've got to be careful that if we get a big sell-off, where the levels are going to be. 1150. And then 08 and a quarter. And 0450. And then the big one is going to be, again, next big key line in the sand is going to be that 98.75 again. All right, so that's what I'm looking at in the ES. If we open up inside a range, inside a value, look for them to come down and test the 77. Okay, and then possibly rally up through these levels. But if we find buyers stepping in and getting us up through that 81, look for them to test the 83, and if they break the 83, I think you got a nice little zipper move up into the 85, 85.50 area with possible continuation to go into these higher numbers. Let's take a look at gold. I don't have my gold chart open. And I gotta fix all my profiles. But let me just get the immediate ones in here. Sorry about this. Just do one more. Just don't want to get my. All right. So currently we're trading in around this 39, 37 area. Probably come down and test this 35 area. But if they hold the 37 and they move above the 42.90, then I'd be looking for a move back up into that 54, 55 with continuation up to 48. The big number above us is still that 54, 55 area. And then above there, the 63, 70 is going to be a very important level. There's not much above here. And if we can get above this level, I think we'll get the next big leg up into the 70s with 74 and the big target being that 78 level. Chopping around here, there's really nothing until we get down below the 1129. If you get below the 1129, there's going to be this one right here. What was it again? It's right in here. Whoops. That's 31. No, it's going to be down here then. No, it's not. Okay, I have to go get my other drawing. It's on my other computer to get this fixed up a bit. I'm just trying to do this quickly. Below the 1129, I'd be looking for a move down into the 23 area, and below 23, the next big target below us is here. This is where we got the big rally. And finally, they went down, picked up buyers here, then accepted value here, and then blasted off. So the next big target down there is 1114. I think we're going to hold the 29 right now and slowly start working our way back. Gold sort of moves in, 2 steps forward, 1 step back, 3 steps forward, 2 steps back type of scenario. But I don't think gold's going to be the opportunity today until about 2 o'clock, and then we see what happens with the Fed meetings. So that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.